Good morning, everyone, and welcome to the European crossover webinar. And we've seen the euro going to continue to slide a little bit more here. It's actually even started in Asia. I'd like to move this thing out of the way. There we go. And we did see the euro make a couple of stabs here just below 112. Actually even dip, as I mentioned, in Asia. Not a whole lot of follow through as the dollar index came here. Now we do have a minor pause here. I don't know if I had posted that before, which is at 97.45. We were actually, I think at the time we had looked for 97.66. We're looking at, but our overall target, see there's a little pause here. I think I mentioned it from last week, and it looks like we've tagged that 45 and just eased off just the slightest. But you know that what we're looking for in the dollar index on the daily, we've got 97.66. That's what we're looking for in the short term overall, which is a much higher. We're looking for a move here to 97.89, which is, if you look here on the weekly, let's pull this back. Is this entire move right here. 88.29 to 103.83. So 61% move up to here, and I think we'll, before it's all said and done, we'll, I don't want to say easily get there, but we would. Any push beyond that would actually take us up to 98.55 or 98.47. Almost another 80 ticks higher from there if we push much beyond there. But I think here's where the market, you can see right here, comes in with a level also. Now, as I said, we're looking on a weekly level, but that confluence is right here with that 61%, also the 97.89. Looking here with crude oil, which has certainly impacted the dollar CAD. Crude oil continues to remain very strong. We're looking at actually at this level here, and you can see it on the weekly. We're looking at actually, I was looking at it on the daily. Right in here where this market could at least try and take a pause, and I think maybe we'll do that here. I think it was Steve who was looking, he said I think they'd reached 161%. They're looking for overall for the market more likely to go lower than higher. And we'll see. You know, I'm of the same ilk, but I haven't had any other than when I thought that we would not pause and would still push higher. Other than that, I've been flabbergasted with how high this crude has continued to maintain and move higher in light of overall global growth. But that being said, as I mentioned, we may be able to take a pause at this point. Cable came off of its lows here. We had mentioned about that pivot on the daily, and we'll go and take a quick look here before we go into the news. And as I mentioned, the news is very, very light. For the most part, we're always going to cover just two news stories, morning bid and one FX story, and that's it, unless we have something relevant then posted. But anyway, moving on here to cable. We talked about in the analysis of again the start of the week was this 29.80 being somewhat of a pivot. And the market is held trying to push a little bit higher off of that low. We mentioned two consecutive closes below this, and we're going to go down to 25.56. At least technically, that's where we would end up heading. We've seen the dollar yen make a move higher. Now, on the analysis, speaking of the analysis, we'd mentioned about this 1121 being the 60, which is a level here, confluence with the 61%. We saw the market just about get there in the Asian session on Sunday evening, and then pair back, only to come back with a vengeance and take that out. And actually, this is a stretch level that we had, 1144. So we'll see what can happen. Could the market possibly push up here to the 78%? Yeah, it could. And there wasn't really much of a pair back from the 61%. But I would still, I mean, we'll see what happens. This is a pretty good level here, this 1144. I would have expected the market to be a little bit positive. I guess it could push it up even a little bit higher, up to, was it 50? But I'm still thinking, like I said, we've come a long ways here with the S&Ps. Maybe we can just edge back a bit here. Had a pretty big run here. Let's go on and take a look at that. So pretty good run up here in the S&Ps, and to me, I'm thinking is that maybe we can go and take a little bit of a pause here, just to ease back. I mean, we had a pretty big run on the whole China news, and also a little bit of improvement, not only in the China as far as their own PMIs, and Japan even had some very nice data, but also the China trade talks. So maybe we take a bit of an ease out. As Dale likes to mention, turnaround Tuesday. Maybe we'll see this market ease back a little bit. I think we probably knocked a few people out of the box here. Probably may allow us to go in and pair back here, maybe towards this 28.50, 28.45-ish area here. It certainly has hung up there for a long time. Look at that. I mean, it's continued to have a pretty good push, and we've come off these lows. If you look at here, we've had a pretty good run up here. You're talking basically 70 handles up in here, and actually more than even 70 handles. So maybe we'll get a bit of a pause back. I'm thinking hopefully, maybe let's say about close to 15 handles. I'm thinking that may in turn allow this yen to go in and pair back a bit. I'm short up here with the dollar yen. But I think we do have some people that are short yen from much lower levels. I remember last week I might have jumped out too early, but I guess I didn't jump out too early. When I ended up covering here, I think it was at 57 or something like that. I didn't even short for that much. It was like the second time or second half. I don't remember, but I remember covering here like at 57, thinking I probably jumped out too soon, and then boy, did this thing make a pretty good run. I did miss opportunity here in Asia to sell this, and I even thought about just selling it anyway and miss an opportunity to catch a little bit extra down here. But I did jump back and forth here, and we'll see how we stand here. But if we can get that dip, I think that would allow this market to come down potentially to about 1105, right around there. I mean, first pause will be here at this 20, but I think we can come down here to 1105 before we make a move. So if anyone's shorted from up here or added, any move down here towards a really, if you want to scalp it, around 1118, then we'll probably pop back up. And then I think it's 1109, we'll probably see a little bit more short covering. But 1105 is where I think they could pull back. And longer term, though, we'll see if we can eventually move much slower. But once again, we talked about this on yesterday in the Asian analysis. We covered about this. And remember, we had said that, let's move here. We'd mentioned in that Asian analysis that the short-term complexion of the dollar yen had changed, because remember we'd had such a strong close here on the daily. Remember how we got that nice close, and we had said that it changed the short-term complexion, so the market was open to moving higher. We said that we're looking around that 1121, which was a level in confluence with the 61%, and that we could see a stretch move to 1144. Well, we certainly have got it. So we'll see how that pairs back. Let's go and move into the news. Crisis cabinet on Brexit as stalemate hardens. The UK Parliament had an opportunity last night to seize the Brexit initiative from Theresa May, but chose, for now at least, not to take it. In the end, too many lawmakers stuck exclusively to their first preference to carry any of the softer Brexit variants across the line. Thus, members of the independent group, the newly formed party that pledges to break down the old silos of the UK politics, stuck to demands for a second referendum and rejected options under which the UK would stay in a customs union or in the single market, despite the latter strikingly being backed by Labour. Whether the Assembly is more minded to go for the second best concerns in a final set of test votes on Wednesday, oh my goodness, now largely depends on what happens in May's bitterly divided cabinet today. Her allies are already out arguing the case for her deal is now even stronger and are trying to scare the hard Brexiteers into backing it with their talk of customs unions and second referendums. EU negotiator Michael Barnier said this morning, no deal Brexit is looking likelier, but could still be avoided. It's still worth remembering that no deal would be a big headache for the EU and notably for Dublin. Francis Emmanuel Macron has invited Ireland's Leo Varadkar to Paris today for talks that will inevitably broach the subject of what happens if the UK crashes out of the EU without an agreement. In that event, it would be down to Ireland to protect what would then be a land border to the EU's single market, ensuring in fact that the market's rules are not undermined by non-single market goods and services entering from a post-Brexit Northern Ireland. Yet a new hard Irish border would seem as a massive setback for peace on the island. In a sign that of the seriousness of the matter, Germany's Angela Merkel is also due to meet Varadkar later this week. Wow. A delicate trip is meanwhile in store for Greek Prime Minister Alexis Tsipras today as he visits the newly named North Macedonia. The deal he struck with Skopje on the name proved unpopular for Tsipras at home, where angry protesters condemned the decision to allow the continued use of the word Macedonia. The fact that many Greeks fear implies in a lingering sovereignty claim of the northern province of Macedonia. Tsipras, who is looking to secure re-election later this year, will be accompanied by a delegation of business executives and investors. Some brightening of the global industrial mood in March, at least in China and the United States, completes with another dour U.S. retail sales report for tension and leaves world stocks just a whisker off their highs for the year, but hesitant in breaking new ground. After surging more than 1% on Monday, the MSCI's all-country index hovers just below the mid-March peak, itself a 6-month market high. Markets appear wary of another push, however, with Asia's major bourses little change overnight, despite Wall Street's rally and risk assets and currencies generally dialing back a touch, including a retreat in the Australian dollar after the RBA left policy rates unchanged. Brent crude was the exception, setting new month highs at $69.50 after U.S. threats of fresh sanctions against Iran and a key event of Venezuela of a terminal halted production. Treasury yields failed to hold 2.5% after Monday's sharp spike, and while the yield curve from 3 months to 3 months is now back in positive territory, it is halved again from 10 basis points last night to less than 5 basis points this morning. So this might weigh a little bit on the dollar yen. We shall see. And it says on the Brexit process, ran into sand on Monday, knocking sterling back towards 130, where it retreated last week. While no option garnered a majority, the proposal with the most votes was a second referendum, and the one with the narrowest defeat was the one for a post-Brexit customs union with the EU. Let's see here. Okay, I'm looking up ahead. We do have U.S. February durable goods. We also have Dallas Fed Chairman Kaplan speaking in Toronto, easy February jobless and producer prices. And let's finish up with the dollar. Dollar gains as ebbing concerns lifts bond yields. The dollar rose to a 2-week high against the yen on Tuesday are ebbing concerns about weakness in the global economy lifted U.S. bond yields from 15-month lows, but now this morning we've seen that halved. Greenback was steadying at 11.39 yen. The dollar index gained against a basket of currencies. U.S. Treasury was sold, and the yields had surged overnight, with the benchmark 10-year rate raising more than 8 basis points as encouraged manufacturing data outside the U.S. and China spurred some investors to scale back their long holdings of safe haven bonds. The 10-year Treasury yield stood at 2.49.5, pulling back from a 15-month low of 2.34. The dollar is benefiting from broader risk on, with bonds sold and stocks being bought in light of the strong U.S. ISM data, said Shin Kadota. Seasonal flows also appear to be helping the dollar, with the currency drawing demand from participants kicking off the new quarter. The new factory reading was not enough here, as an unexpected drop in U.S. retail sales. The positive tone had already been set after China's official purchasing managers index, released on Sunday, showed factory activity unexpectedly grew for the first time in 4 months. We've seen surprising succession of positive indications emerge after excessive pessimism. Dollar bills are still intact, but the result will be tested further by more economic indicators, such as the non-manufacturing U.S. reading on Wednesday and non-farm jobs report on Friday. So let's go on and move into the analysis. So we had our support here at 1196. Low was what, 11? Looks like 1190 right here. So pretty close here. We were looking on a very short-term basis. Here, the year's not out of the woods, and we did mention here with the dollar index, it's paused at 97.45. Now, we had mentioned it on Monday, but this is a number we had mentioned. I think it's like mid last week, this 45. I thought it might just be a little bit of a pause. I thought probably on the march up to 66. Well, we'll see if we can slide back a little bit further in the dollar index and probably help out those of us that are short dollar yen. So hopefully we'll go and get that pullback. And so looking here on the currency on the euro, actually when I saw the euro sliding in Europe, I thought we probably would have seen more follow through coming into European trading, but we're not. So this might be a bit of a reprieve for Euro bulls who saw a stab below 112 in Asia and even now. So let's take a look here. The support, we'll go and keep it 1196. Okay, we'll go and keep that there for now. Okay, resistance on the short haul basis. You can see how this thing's been hugging the lows, and the volatility has been so low. Reuters has a nice little graphic regarding volatility, and actually they don't expect it to change anytime soon, but we shall see. Things always happen. But I didn't want to spend too much time on news, but a very nice story they did on volatility, and they're not looking for it to change at all, really. Resistance will come in right there at 1247. You can see this line coming right across here. There. Let's go move into cable. So for now, it's all about the pivot. And really nothing's changed here on this pivot. And that's going to be support right now. It's going to be the 20. Actually, we even dipped it before. If you remember, we had talked about that for a move potentially just below the pivot to goose some stops here. So this is where support's going to come in, 29.54. Seems a ways away, but I'll tell you what, with these headlines keep continuing to move lower here, we'll blast through that, but I think we'll find some shorts at least initially step in right here, and that's going to be right there as 29.50. We'll call it 29.54. Right there. We're open to getting a quick little slide here as this news keeps pushing, and the concern with crashing out with no Brexit deal probably has to be factored in from a percentage standpoint. So we're going to go with 29.54. Probably not the closest. You can find other areas much closer, coming here at 30.34 on a very short-term basis. But we have to look where this market can potentially pop to, and we're going to look for 29.54. As far as resistance, I mean, I would think that the closer we get, even though the volatility hasn't been as strong as it had been previously when we were whipping all around here, to me, I think we're just on the edge of pushing for more volatility, and you have to be very careful. I think as the days keep winding down, I'm surprised we had much more volatility, but I would think that we'd be on the edge of a big bump in volatility here. So we'll go with this 31.28. I can't help but thinking that the resistance to the upside is much lower here at 30.93, but because of volatility, we'll go with this 31.28. We had here. Let's go on and move into the Aussie dollar. Well, we broke lower here. Despite the Aussie's advances, we still been feeling that we're going to move lower. Remember, we had the support back down at 70.25 last week, and our resistance, I think, well, we had it for 71.30. I think we adjusted it down to 71.42, or adjusted it up. Let's see what we're at. We had it at 71.46. Been as high as what, 71.32. This thing is trapped in very tight range. Obviously, I mean, the key thing is if they get some kind of good news or further good news, and even then, it's the gains are limited. I think it appears like they're really not going to get a good sized jump unless we, actually get to where they're going to close the bid on the deal here. So resistance is going to come in right there. Just kind of wind it down to 71.32, not that much slower, but we'll wind it down a bit. Support on a short-term basis and come in right there at 70.40. Boy, did it lose its bid. And we see the Kiwi also dip itself too. Resistance support on a short-term basis is going to come in right there. 67.59. We're not that far away, actually 10 pips. So let's move that just a little bit lower here where we see a little bit more volume coming in right there. 67.48. 67.48, about 20 pips away. I don't want to adjust this too low, although we're trading in very tight ranges here in this Kiwi, and you can make the case of 68.10, which is not that far away. We're just going to come right across here, which is 68.32. And definitely bearish. Let's go and move into the dollar Swiss. We've worked a little bit high, but you would have thought that this market probably would have moved a little bit better in light of the dollar strength. The 50% comes in here at par 10. We'll go with that, par 10 for the resistance. That dollar really saw a pretty good move yesterday. Support's going to come in right there at 99.59. 99.59. And let's go and take a look here with the dollar CAD. Well, we did go and see this pullback with the dollar CAD with the strength in the crude oil, and I made the case about 33.22 and then 08 and 32.93. I actually had a bid working down here. I thought had both hands open to catch this 32.93 late in the U.S. session, and it did not quite make it down there. It's really disappointed. Then we saw a pretty good move up here to about 32.29, and then we turned around and saw the dip. I thought we'd make a dip down here with the crude strength here to 71 before moving higher. We're just kind of holding steady here. Obviously, the dollar strength is certainly helping it. Short-term basis, although it's holding up very well despite the strength in crude, we'll go with 32 to 32.93 here. It's holding up, even though crude, and I think crude is, as I think Steve was one that mentions, closer to a top than it is to advancing further. From a daily standpoint, this would be a decent area here, this 93. I was thinking they might be able to make one more push down here towards 78 after we'd already come up to 70. What we're finding here, or what I'm finding here, is each rally back ends up falling short. That's what just happened to keep seeing. Rally back, fall short. Rally back, fall short. Saw the same thing here. Although actually it's holding up rather well here. Now we're making a push higher. I thought would have been one more dip down here. Holding up relatively well. Resistance. We're going to have to go with this 33.60 right here because it's. I'm a bit surprised we were able to take out that 29 despite the strength in crude. So, crude is its value is diminishing as far as the ability to have an impact on CAD at the moment for, with these gains. It did push the pressure lower, but I thought we would spend a little bit more time below 33, and we did not. So if crude were to start to slide, we quickly jump up to 33.60. So that's going to be our resistance. Onto the dollar peso. Boy, was this a disappointment here for bulls. I myself would have thought we'd have taken a pause. Maybe we'd dipped it below, but 1925, not much, and then pop back up. And well, obviously, I think crude also had its own impact. But wow, did this thing really lose some steam? And 1920 is really basically, as I was saying before, it's almost like a pivot at this point. It really is. And the fact that we lost 1920 makes it, certainly going to raise concern for bulls looking further out. Well, not only did we lose 1920, we're even staying below 1920. Resistance now is going to come in right there at 1926, which I think that was our support. Resistance now. I will say this peso has been stretching on both sides of the spectrum. When you look last week, I thought we would have found some good support around 1897, 1895, and boy, did we dip lower. Then only to get a strong rebound, which pushed us up here towards this 1917 pullback, and then really goose them up here, and then at the same token, pull back so quickly. 50% would come in right there at 1911.4. And I think we're going to have to go with that. Actually, even a dip even below that if it were to take out these lows, which would come in at 1910. 1910.3. And that's very, very wide. But what you're seeing is you're seeing this thing really stretch on both sides. And that's my point. The 50% comes in at 1913. But I wouldn't be surprised to see them blast past this 1913 and not find any support till you get here to 1910. Right there, it's right there. 1910.3, 1910.4. And with the 1911.3 being the 50%. I tell you, this one has really been all over the map over the last week. There we go. Let's go and move into the dollar yen. Well, we had, and I thought this was a pretty good value here too. Remember, we even had 11.35, which actually had that pegged already because remember we saw 11.21 or almost 11.21. Fell a little bit short. I think it was 11.18 and change for the high in the Asian session, and we had 11.21 as our resistance, or actually it was a level that we're looking for, which confluenced with the 61%. So I said any moves to 11.35, that's going to be a good value area here, because I thought, okay, once we get the data, retail sales, and it came in actually poor, which is surprised to see the dollar yen still pushing higher, which makes me think that it's rather susceptible, but it's certainly not showing it at this point. So it came up short. You see here in the Asian session on Sunday, came up a little bit short of that 21. So I thought, okay, we'll probably take a move, take out the highs here, take a bit of a pause, which we did. But if we do get a move here, anything up to the 30s is going to be a great area. Well, we did get up there, and we actually made it up to our 11.44, which is our stretch from the Asian analysis from over the weekend. Because I had put in here that the complexion had changed on the daily, on the dollar yen, on a short-term basis. Still, the dollar yen looks like it could go lower on the longer haul, but certainly the S&Ps are making their case to that not to be the case, or making their point for that not to be the case. But our stretch target was 11.44. Boy, we are hanging around this 11.44. When I looked at this over the weekend, I thought, well, is there a possibility they could make it to the 78%? Yeah, there is. I mean, there's some additional resistance there. I think it would be short-lived in the sense that if it were to make it up here, I think eventually we'd pull back. But, you know, the S&Ps have had a pretty good solid run here. We'll see how the data comes out. We may hang on. I think any dips down here towards the 111, it's not a bad idea if you add it on up here to take some of that off. I think that's probably disappointing to hear for those who might be short from down here. And I think there are several people that got short in here. And once again, like I said, you had to look at those closes, and that Friday close, like I said, it was the best of the week, and why I said the short-term complexion had changed. So we'll keep the resistance here for 44 for now. Potentially we could make a run up here to to 60. 60 is a possibility, and 62 is a 78%. So we shall see, but I think right now it's a matter of they have people that are short from below 11 and seeing what their uncle point is. But we shall see what happens. So we're going to keep this 1144 support. We're going to go with 1105. I think we'll see some. Actually, going to go with the 1109 because I think we can get to 1105, but I think there'll be some good support there at 1109. So let's go mark that. Actually, we're going in. If you get the opportunity to cover down here, I would, because we're going to NFP if it's favorable. I mean, on a short-term basis, you could take some off, and if we eventually rotate lower, well, what the heck? You're going to be short from way up here, around here, and eventually we fall back. But right now, the PMIs out of China look very well. Looks like the stimulus might be finally starting to work. Remember, they had that relentless stimulus going from about over two and a half months ago, and it was almost daily. Seriously, it was every other day. I'm not joking either. But we also have non-farm payroll. So it really dips down here to this 1110-ish area here. I would look to take some off the table and let the market reassess itself. Resistance, we're going to keep 1144. Now let's go move into the dollar index. Well, we've gone and discussed that about the dollar index, and we'll quickly touch on that because it is important. We covered it early on. The move that we're looking for the week was for 97.66. Now we think eventually we can get up here to this 97.89 level, which is confluence with the 61% of the entire move of 88.29 to 103.83. We showed the weekly chart earlier. But so we think there's a potential that might end up pushing this dollar yen higher here. So once again, I think that if you have the opportunity on the dollar yen to cover some of your ads on around 1110, I would take that opportunity ahead of NFP. Now, once we get past NFP, if we're still going lower, then you would push that big event out of the way. But we're still having the opportunity to push higher. 97.45 is a resistance on a very short-term basis. We're kind of pushing against that. We're going to go and keep this. Now, we're going to go with this 97.66 as our resistance, which was a target that we're looking at for. Support will come in just there at 97.23. Then you got to be careful with this euro, and that's what might push this dollar up higher. We're going to be at a point where people start throwing in the towel on this thing, and boy, we'll be able to, this thing come unglued at that point. I was making the case earlier in the chat room yesterday. The thing is that you have a lot of people that are picking this up, looking for the moves. And even some that picked it up yesterday at 1205, 1208, 1202. And they've got their stops a little bit lower. Well, let's say that they're thinking, this is nuts. The euro is going to eventually, it's going to come back. Well, here's the deal on this. One way to look at it, and the way I look at it, if they get stopped out, Okay, if they get stopped out, whether they get stopped out 1188, 1180, 1172, whatever the case may be, even if they believe in the euro, or they think not necessarily they believe in it, but they think that it's overdone, it's not like as if they're going to come back anytime soon. It's not like as if you're going to say, well, you know what, I just got stopped out of the dollar yen at 1148. I'm going to come in, although different situation, but I'm going to come in and I'm going to add 15 pips higher or whatever. And the dollar yen is bumping up against key resistance on both sides, on little levels here. 44 could maybe make it up to 62. The euro, in the meantime, could very well drop, and my target is down here to 1149. The point being is, anybody gets stopped out, they're not going to turn around and jump right back in again. They will, but they're going to jump in 50 pips lower, 75 pips lower, if they still believe that the euro is overdone. Other people are targeting 110, 108. But as I mentioned, those people that get stopped out, even if they think, well, the market's a little bit overdone, it took me out, they're not going to come in 25 pips lower. They're going to come in 50, 75 pips lower, even if they still believe that the euro could move higher. Henceforth, you can see here, we can start to slide here, and that's going to push this dollar, and obviously going to push the dollar yen might get carried away with the strength in the dollar. But just be wary of this. Boy, we pressing for time right now. Let's go on into the cross rates. Quickly move into gold. Well, at this point, I think there's still the possibility we're going to move it down to 1267. So I really don't see any changes here for gold. We've got 1285. Actually, we're just bumping up against this 12. Here's the problem. The dollar keeps pushing higher. It's going to knock this gold even lower. So we are going to have to move this down here to, for right now, 1280. And actually, I think we'll move it even a little bit lower, 1277. Resistance comes in at 1292. Let's go move into the euro pound. Resistance for right now is going to come in right there, 8602. 8602. Boy, this thing's trading rather tight. Support's going to come in for volume coming in right there, 85.56, 85.55. That may be a little bit tight, but it's trading very tight. And on to the euro yen. $25.14 might be a little bit too much to ask. It's just going to be at the 25 even here. Support still remains the same here, 24.46. And let's go into the euro odd. Well, we're bumping up against resistance here at this trend line. Let's take a look where we stand here with the fib. Boy, we're right there at the 38% to boot. We'll give it just a little bit of room right there at 58.63. 58. Oh, right there. Coming right there. Caught 58.69. 58.69. And support comes in right there at 58.06. Well, this Euro New Zealand key resistance level up in here. If we get that push, and certainly that, look at this strong close. Look how they came down here to test this. They finished up strong. They're pushing. This really opens the door, at least initially, for 65.82. The real resistance comes in at 66.03. Let's go with this right here for initial move. I think eventually they'll make it up here, but let's push it right here for now at 65.80. With support coming in right there, 64.94. And on to the Aussie yen. We made that strong move up here into this 79.40. I think on here we had that's what we had, 79.40. That was a high, and that right there, that was our resistance. Boy, we are losing ground here now. Resistance is going to come in right now at 79.03. And support comes in right here at 78.55. 78.55. We're just hitting it right now. We're hitting the 50%. We're holding that 50%. Twice we come back. I'm gonna go right there at 44.70. And resistance comes in right there 45.73. Here, I thought this was all going to be in play in light of all the hoopla with the RBA, and it did not. Resistance comes in right there at 85.08. We'll move that support up a little bit higher at that key level, which is 84.06. Resistance can be 93.33. And support will come in right there, 91.83. 91.83. There's the bias chart. We just got it just under the nick of time. And I'll get that posted. And thanks for joining us here on the European Crossover webinar.